The liquidation of Evergrande, ordered by a Hong Kong court on January 29, 2024, has created a sensation around the world. Once a Fortune 500 global player, the real estate development giant is at the center of an unprecedented crisis in Chinese real estate. It's like the death knell for the entire Chinese real estate industry. The Evergrande Group is headquartered in Shenzhen, listed in Hong Kong, and has borrowed debt from everywhere in the world. Of its total debt of $300 billion, the overseas bonds are about $19 billion. It's basically all U.S. debt. How much debt can overseas creditors recover? What are the main challenges? In this episode, we explore these questions and analyze the knock-on effects of Evergrande's liquidation on China's capital and real estate markets. The liquidation action was filed in June 2022 by Topshine Global, an offshore creditor of Evergrande. Because Evergrande is listed in Hong Kong, the Hong Kong judiciary has jurisdiction over it, and the creditors can come to Hong Kong to sue it. After 18 months of the liquidation case and several adjournments of the hearing, a judge of the High Court of Hong Kong issued a liquidation order on January 29th, citing the company's insolvency as the reason for Evergrande's inability to come up with an effective solution. This formal liquidation order immediately suspended Evergrande's trading during the trading session, and its share price plummeted by more than 20% before the suspension. The court appointed a liquidator for Evergrande's parent company. The liquidator will have the power to take over all of Evergrande's subsidiaries around the world, including in China, and sell the company's assets to pay off its debts. Tiffany Wong, one of the two liquidators appointed by the Hong Kong court, said the liquidation order is only against the parent company, China Evergrande Group, and will not have a direct impact on the operations of the group's subsidiaries, especially the mainland subsidiaries that will not be affected by the liquidation order. Evergrande can appeal the liquidation order, but the liquidation process will continue during the appeal. The ruling made by the Hong Kong court will have no problem being enforced within Hong Kong's jurisdiction. Evergrande's listed and traded shares, properties, and all chattels in real estate in Hong Kong have to be sold within a short period of time. But will Evergrande's assets in mainland China and in the US be sold as well? That depends on Evergrande's creditors whether or not they can convert the Hong Kong court's judgment into a court judgment in mainland China and the US. Since 2020, the U.S. no longer recognizes Hong Kong's status as an independent customs territory, and the gap between the two jurisdictions in terms of mutual recognition should be widening. But in the case of Evergrande, we don't think there will be much opposition. If Topshine Global is one of the creditors of Evergrande's U.S. debt, it can apply to the U.S. court for liquidation. Other creditors of U.S. debts can also invoke Hong Kong precedents and apply to the U.S. court to enter liquidation proceedings against Evergrande's assets in the U.S. The biggest problem is whether or not the courts in mainland China will recognize the decision made by the Hong Kong court. Evergrande's property in Hong Kong is probably not enough to pay its debts, so the creditors will have to propose to take Evergrande's assets on the mainland to pay the debts. This brings us to the question of Evergrande's subsidiaries in China, their legal status, and the extent to which they are liable for the debts of their parent company. So, even though there is a Hong Kong court issuing a liquidation order, the whole process will be very complicated. It involves a few departments with most likely political considerations as well.
And I mean, it's quite fairly easy to assume that, for example, onshore investors, especially bond investors or home buyers, they will probably still be the one who benefit. However, if you think of the offshore bondholders or even shareholders, they probably will be at a lower repayment rank. So this basically means that, well, it's nice to see there at least be some solution to the problem. But this solution may not be perfect for everyone.
Evergrande's head office is in Shenzhen, but its actual operations have been moved back to Guangzhou. So courts in Guangdong province can decide what to do with Evergrande's global assets. Within China, Evergrande's assets are spread across many provinces and cities. In order to avoid Evergrande's creditors from all over the world swarming to sue in different jurisdictions, causing confusion, in 2021, after Evergrande's wealth first blew up, the Supreme People's Court of China issued a notice to transfer all Evergrande-related cases to the People's Court of Guangzhou Municipality to have a unified jurisdiction. It seems that within China, the case of Evergrande is in the hands of the Guangzhou Municipal People's Court. This is the current situation. However, China's judicial process is chaotic, and it's hard to say whether courts such as those in Shanghai, Shenzhen, and Xiamen might get involved in the future. Of course, Evergrande's fate is controlled by Jiangnan Hai, where the leadership of the CCP resides. It's speculated that it might take months or years for the offshore liquidators appointed by the creditors to take control of the subsidiaries in mainland China. Moreover, as the jurisdiction of mainland China is different from that of Hong Kong, the market is still closely watching how the liquidation order will be executed. Whether foreign creditors can apply for the sale of Evergrande's assets in mainland China will depend on whether the mainland court recognizes or enforces the liquidation order in Hong Kong. If it's recognized or enforced, the overseas creditors can claim the assets in mainland China. Otherwise, they can only apply for asset liquidation in Hong Kong. For Evergrande's Hong Kong shareholders, the likelihood of receiving any compensation from the liquidation process is low. Evergrande's total market capitalization in the Hong Kong stock market collapsed from more than HK 300 billion at the peak of the upheaval to only HK 2.1 billion at the current time, evaporating more than 99% of its market value. In July 2023, Evergrande cited an analysis by Deloitte at a Hong Kong court hearing that once Evergrande was finally liquidated, the recovery rate would be only 3.4%. By September 2023, Evergrande said it was under investigation by the authorities because its founder Xu Jiayin was suspected of criminal activities. Creditors expect the recovery rate to be less than 3%. Evergrande's main offshore assets are its two Hong Kong-listed subsidiaries, Evergrande Properties and Evergrande New Energy Vehicles, while most of its other assets have been sold or seized by creditors. The liquidator could sell Evergrande's holdings in the two subsidiaries, but it's expected to have a hard time finding buyers. After the liquidation, the liquidator could take control of Evergrande's mainland China subsidiaries by replacing their legal representatives, a process that could take months or even years. Insolvency experts say it will be a challenge for the liquidator to change representatives because Guangzhou, where Evergrande is headquartered, is not one of the three Chinese cities that mutually recognize liquidation orders with Hong Kong. Even if the liquidator were to take over units in onshore projects owned by Evergrande, many of those units have already been taken over by creditors and have little value left or even negative equity due to falling property prices. According to local media reports, citing court records, Evergrande's assets across China have so far been seized or frozen in an amount of more than 53 billion yuan, or about $7.2 billion US dollars. How big is the mess left behind by Evergrande? Apart from the staggering debts, the rotten-tail buildings left behind by Evergrande are spread all over China, with more than 1,300 unfinished projects. Jiangsu and Guangdong provinces are even more hard hit. There are as many as 1.62 million unfinished units, and the number of victims who have been trapped by the rotten-tail buildings is estimated to be 5 to 6 million. Now let's look at the knock-on effects of Evergrande's liquidation on China's capital and real estate markets and its impact on the average Chinese. First, let's briefly review how Evergrande has come to its liquidation, step by step, since it fell on hard times in 2021. This was the scene in 2021. The debt crisis of Evergrande Group, China's second-largest property developer, continues to worsen as its wealth products, Evergrande Wealth, failed to pay on September 8th. Many lenders doubt Evergrande's ability to honor its debts. As a result, victims in various parts of China have launched large-scale protests for several days in a row. On September 13th, hundreds of people stormed Evergrande's headquarters in Shenzhen, and government officials mobilized a large number of police officers to clear the site. As mentioned earlier, Evergrande is the most indebted developer in the world, with debts totaling more than 300 billion. After the financial crisis erupted in August 2021, it has been in shambles ever since. Several Evergrande projects in China were halted due to overdue payment issues. Afterward, China's central bank and banking regulator called in its high-ranking executives for a rare warning that Evergrande must reduce its debt exposure and prioritize stability. Evergrande and a range of its real estate peers have defaulted on offshore debt as home sales have slowed and new sources of financing have dwindled, sparking fears that the crisis could spread to China's financial sector. Evergrande founder Xu Jiayin had been reported to have sold his assets to fund Evergrande, but still failed to solve its debt crisis. On August 17, 2023, Evergrande filed for bankruptcy protection under Chapter 15 of the U.S. Bankruptcy Code in Manhattan, New York. This law protects non-U.S. companies undergoing reorganization from creditors suing or seizing assets in the U.S. On August 28, 2023, Evergrande stock resumed trading after a 17-month suspension, but its market value plummeted by a whopping 79%. On September 15, 2023, China's State Financial Supervision Bureau approved a state-owned company, Harbor Life, to take over Evergrande's life insurance business and corresponding assets and liabilities. In the same month, Shenzhen Public Security announced that it had detained some of Evergrande Wealth Management's employees. At the end of September, Evergrande announced that its founder, Xu Jiayin, was under investigation for allegedly violating the law and committing a crime. Evergrande had been looking to develop a $23 billion debt restructuring plan for nearly 2 years, but it was derailed after its founder was being investigated for allegedly committing a crime. On December 4, 2023, a Hong Kong court granted a further delay until January 29, 2024 for Evergrande's liquidation hearing. On January 8, 2024, China Evergrande New Energy Vehicle Group said the company's executive director and vice chairman had been detained on suspicion of violating the law. On January 29, the Hong Kong court held a hearing on Evergrande's liquidation case and issued a liquidation order against it. Evergrande's financial collapse ignited a cascade of debt crises in China's real estate sector, with more than 50 developers already defaulting on their debts, several developers financially collapsing, and many people in the sector losing their jobs. It has served a devastating blow to China's economy and is still dragging down market confidence. At least 3 Chinese developers have been ordered by Hong Kong courts to liquidate before Evergrande was ordered to do so. The market once thought that Evergrande's involvement in China's economy and industries was extensive and deep and that it was too big to fail. Many people thought that the CCP would eventually come to its rescue. However, we have observed that the CCP government from the central level to the local government has huge debts and financial pressure, so it's unable to save Evergrande. Therefore, Evergrande's liquidation is not only not a surprise but also tantamount to the CCP telling other real estate companies, "You can only rely on yourselves, the government has no money." Asian shares fell on January 30th, hurt by the court-ordered liquidation, while rising geopolitical tensions propped up oil prices and kept a lid on risk appetite ahead of the Federal Reserve's meeting. How the court order to liquidate Evergrande Group will play out and its impact on China's fragile property market keeps investors on edge. Thus, Evergrande's death knell is not only ringing for itself, but also driving the industry's general crisis. Creditors of other real estate developers in China will follow in the footsteps of Evergrande's creditors and ask the Hong Kong court to liquidate the company. Sunac, Country Garden, Shimao Group, and so on, all these large Chinese real estate companies are facing the same problem. Such scenes are common in China. Home buyers of the rotten-tailed buildings are defending their rights. Construction workers who weren't paid are demanding their wages. There are also real estate developers who, due to a lack of money, lease out storefront properties that were already sold to others but refuse to compensate the original business owner. Over the past 3 decades, China's real estate and related industries were the main driver of China's economic growth, contributing around 30% of gross domestic product. The latest data from China's National Bureau of Statistics shows that sales of new homes in China fell by 6% in 2023. Returning to their lowest levels since 2016. Prices are even falling in China's wealthiest cities. Looking forward, it'll be even harder for developers to sell their inventories, therefore making it more difficult to pay off their debts. These unpaid debts will eventually turn into bad debts for the banks and a burden for the financial institutions. China's financial system is already in grave danger. An obvious example is that after more than 2 years, more than 400,000 victims of the Henan Village Bank haven't been able to get their deposits back. Instead, they have become a group of people that the CCP regime is trying to keep under tight surveillance. See, they have been intercepted everywhere when they try to defend their rights. In China, land finance has always been the road to survival and development for local governments. When real estate enterprises have difficulties in operation, they will no longer buy land from local governments, and local governments will lose their main revenue. Then, the more than 92 trillion yuan, or about US 13 trillion, of local government debt as a whole will turn into bad debts, which will be pressed on the banks as well as on the contractors and other industries. Currently, the CCP authorities are struggling to cope with economic woes, including the housing market, which is at its lowest in 9 years, and the stock market, which is at its weakest in nearly 5 years. What's next is China's financial institutions will have to take on the astronomical debt of real estate companies, the huge debt from various levels of governments, and personal debt of many people who can't pay their mortgages, etc. The property companies, the financial sector, and the local debts will then form a colossal storm that envelops the entire China, triggering a systemic financial risk. It'll be the Chinese version of the financial tsunami. The Central Bank of China recently made a rare move to release liquidity, announcing interest rate cuts and reserve fund cuts in preparation for banks to release 1 trillion RMB to stimulate investment and the economy. This is because the three drivers of China's economy are completely out of whack, meaning that investment, export, and consumption are sluggish and even in a deflationary plight. But the problem is that the CCP has cut the interest rate and reserve funds many times over the past 2 years. Why is it not working? The key is that what private enterprises lack is not capital, but confidence and a safe environment. What consumers lack is not slogans and pie in the sky, but confidence and cash. In a nutshell, after all these years of being tossed around, the Chinese people have lost confidence in the entire CCP system. So can the CCP expand its efforts to attract foreign investment to save the economy? The Chinese environment is fraught with epidemic, geopolitical tensions, war, and counter-espionage risks. It's believed that foreign investors and foreign enterprises wouldn't enter a risky country. Given that Evergrande, a once powerful and wealthy enterprise in both the political and business sectors, has been liquidated with debts usually appropriate for a nation, foreign investment and enterprises will surely have more doubts and precautions.